during the bear markets and the dips, when you keep stacking, guess what? You're accumulating coins on the dip or coins very cheaply. And then later, the bull market resumes and you're extremely glad that you were stacking diligently at that time. Even if you're like not in favor of like new functionality, consensus cleanup is more like a bug fix, right? So it would be like trying to, you know, if we talk about being low time preference and fixing bugs and making sure Bitcoin is robust and reliable and secure and decentralized and all the things that we normally say, then yeah, maybe we should be talking about consensus cleanup as an example. I would say the sentiment right now is pretty weak. Or if you look at like these typical fear and greed index, now maybe there's a little bit of subjectivity in those, but they do seem pretty low. Like I saw some people comparing the fear and greed index numbers now are similar to what it was in like the 2022 bear market. You know, the price went to like 16K, right, at that time. So now here we are at like 95K and people are worried almost to the same level. We could see bigger drops, right? I've lived through them and people should be aware. You can have big drops in Bitcoin, like 80% drawdowns. I think it's a lot less likely nowadays. I think now probably 50 or 60% is probably the most you would realistically see.
Hi, Stephan. How are you doing? Everything fine on your end?
Yes, doing well. Thanks for having me back, Robin.
Absolutely. It was really, I think the first time we talked a lot about like self-custody and the current state of Bitcoin, and it was really, really cool. I don't think we have to introduce you as you're already on the podcast and you're well known in the Bitcoin community. But for the few people that haven't seen your stuff and haven't seen the first episode, maybe give us a quick overview of who you are.
Sure. So I'm a Bitcoin podcaster myself. I've been talking about Bitcoin for ages. I started my podcast in 2018. I started in Bitcoin in 2013. Like bought my first coins in 2013. Came to it as a libertarian, as an Austrian, as an Austro-libertarian, let's say. And yeah, nowadays I'm sort of, just mainly known as a podcaster, often doing talks or moderating panels, this kind of thing. And I've done various things in my time in Bitcoin. Like I've done things like I made a course on Seyr Academy, Bitcoin for Everybody. I've worked previously at companies like Swan. Nowadays, mainly podcasting, and here and there I'm investing and advising. So as an example, I am an investor and advisor in a company called Orange, which is a Bitcoin Treasury company in Brazil. I'm also an investor and advisor with Bring In and maybe some other smaller investments in other companies also.
I think we didn't talk about a lot about treasury companies last time, if I remember. I'm not fully sure, but I think we focus a lot on self-custody and all of that.
Right.
Maybe this is like interesting this time around, especially like I think strategy briefly tipped even under 1 MNAV. Now I think they're again above it. But yeah, maybe let's start with the question. How have you seen, now that we are coming towards the end of 2025, how have you seen 2025? What's the price action, the 4-year cycle, ETFs, treasury companies, even the not core debate, Suitcoin summer? There was a lot of interesting stuff kind of going on in this year. What was kind of conclusion to this year and what is kind of the interesting things in there?
Just zooming out. Yeah. Okay. So I think most of us went into this year thinking, it's the post-halving year. We're going to have a crazy good time. It's going to be a good NGU number go up. I think a lot of people were having unrealistic expectations about that. And so, earlier in the year or even last year, there were people talking about, $1 million Bitcoin. Shout out to my friend Samson Mao. I love what he's doing on Aqua, but I disagree on his $1 million prediction. At least now, I think it's more likely to happen, let's say, in the early 2030s, maybe 2032, 2033 is more likely, $1 million per Bitcoin. But I think people are a little bit upset in some ways because they feel like, if I had just been in NVIDIA, and again, it's easy to cherry pick, right? It's easy to cherry pick and say, well, if I just timed the exact thing and bought that instead of this. And, look, I think there's you have to zoom out and understand there are times where Bitcoin gets ahead of itself and gets, behind itself. Or if you're looking at like power law, there are times where we're above the line and then we're below the line. So right now we're a little bit below the line in terms of the trend. I think the trend price is maybe like 110, 115-ish in that range. And as we speak now, it's 95K. And I think it's also fair to say with the treasury companies, there was massive hype, right? Halfway through this year, let's say around June-ish, around there, May, June, July, around that time, there was huge hype for all these treasury companies. Some of that has obviously now dissipated. There's a lot of these now trading either at MNAV, at 1x MNAV or below. My reasoning or thinking on that is it is more volatile than Bitcoin itself. Like, I think you've just got to be honest about that. And also, I think it's fair to say there was overhype, right? People were buying. I think the simple answer is people were overpaying on the MNAV, right? They were overpaying at like 5x, 7x, 8x, or even higher MNAV for that company, when maybe I see it like there is some premium that's justifiable, but maybe just it wasn't like that much premium justifiable, right? And to be fair, it is partly a sentiment thing. So it's not that the companies themselves, the treasury companies, can control the sentiment for their stock. There was just a lot of hype. Now, I think there were, does that mean every treasury company is going to do well? No, some will succeed, some will fail. But I still believe that there is fundamentally a business model there, which is that can you borrow, cheap fiat or get access to fiat cheaply, let's say 10% or less, and can you buy Bitcoin growing? Currently, on the power law, it's growing about 40% per year, but it is going to taper down. So if we average it for the next 10 years, something like 30% per year, right? I think that's the fundamental business model. And then that's the question. Do you believe there is a premium justifiable for these things? Now, look, that's a question for everybody for themselves to decide, okay? Think about it like this. If you just go and buy... Now, obvious disclaimer, not your keys, not your coins. First and foremost, self-custody Bitcoin. You should always hold Bitcoin first before you even think about dabbling with treasury companies. Just want to say that up front. And again, I will remind everyone, I'm an advisor with Orange, which is a Brazilian treasury company. I am an investor also, so I put in coins there as well. I've not sold a single stock. I'm hodling and I see it as a medium to long-term play. But I'll say it like this. If you just buy... Now, if you are a normie who's not comfortable with self-custody, and this person is thinking about buying an ETF like IBIT or FBTC or one of these, you're not getting increased Bitcoin exposure. With these treasury companies, they actually have the ability to try to access cheap equity or cheap debt and try to use that to accumulate more Bitcoin. Now, you have to balance that with the risk of, okay, are they a professional team? Are they competent? Do they know how to fundraise? Do they know, all of these other aspects? Are they taking on custody risk? Which, yes, they are. You have to assess those different risks and blend all of that together and think, okay, what is the premium that I believe is justifiable? Now, for some people, they'll say, no, not even once. Treasury companies, not even once from their perspective. And fair enough. If you just want to hodl Bitcoin or earn and spend Bitcoin, hey, more power to you. No disagreement or objection to you there. I think for other people, they are okay with some level of risk, or they're okay with some different slicing, right? So as an example, maybe they're not comfortable with the full volatility of Bitcoin, but they're okay with some kind of stepped down grade, or the way Michael Saylor explains it, it's like an oil refinery giving out different levels of oil or different types of oil. So there are some people who are not comfortable with the full volatility of Bitcoin. So I see it like there are different trade-offs with that, and that's where, if you're looking at like the preferred share stuff or the common equity of these treasury companies, the idea is how much of a premium do you believe they are worth, right? Is it 1.5x? Is it 1.3x? Is it 2x? I don't know. That's a question for everyone to think for themselves. I believe there is a premium. Maybe longer term it settles, it kind of comes down, but there will be these kind of spikes up and down as we see bull and bear cycles. And I think my explanation is there was some overhype in the last, 6 months or so. And now the sector is taking a lull. I think it'll come back, but it is about having that medium to longer term view with these treasury companies if your goal is to actually outpace Bitcoin. And I believe they will, but it's just a question of, you have to understand the risks that you're taking, and your entry price and entry timing certainly matters.
This is super interesting because I was always at the stance, just self-custody, don't do anything else. Last week, I had a podcast with Chase Palmery, and he...
From Acropolis, right?
Acropolis, exactly.
Yeah. I ran into him in Brazil, actually, at SatsConf just recently, yeah.
Yeah, and just like I recorded last week, I don't remember the day, but it's anyways, and he explained for the first time ever the treasury companies, even though I had Seyr on, I had so many people from treasury companies on, I had you before, and I had really probably 50 great people on already about treasury companies, and it made a click. I was like, oh, I should at least dabble in them. I should research deeper. And I just on that day, I bought a few shares of Strategy, not because I think that is the ultimate play, just because I was hey, I want to learn about it, and it's easier to learn about it if you have the foot in the water, like you kind of get,
dipping the toe,
you're gonna have kind of skin in the game, and then you're more motivated to research about them. The same way I did with Bitcoin. I bought Bitcoin when I still thought it's a scam, because it motivated me to learn deeper. And so I still think you should always and forever build out your self-custody Bitcoin stack first. So if you're like, this is your first Bitcoin video, like go to Bitcoin, go to self-custody, and then come back in 2 months and then learn about treasury companies. If you build out a small Bitcoin stack, as the treasury companies also do. So like copy their strategy first and then see what they can do for you. But it's really interesting because when you look at the new era, like 2 years ago, nobody talked about the treasury companies. I mean, strategy was already around, but nobody talked about it in that amount that we're not talking about it. There are many different nows. And the ETF just, almost 2 years ago now, was introduced in the USA. Is this just a different era that we're now living in? And this is also maybe that's why the price kind of moves in a different way?
So, and I'm sure you saw there was a famous article going around about kind of making this analogy, which I'm sure you saw. It was like Bitcoin is having its IPO moment, right? Now, it's a quasi-loose IPO moment. It's not technically an IPO, but the idea was, look, these early cypherpunks and libertarians who got in early years, they are kind of having their liquidity moment, right? And that's where a bunch of them are kind of dumping and whatever. And probably many of them still believe in Bitcoin, but they're just kind of lightening their stacks a little bit, or maybe they're transitioning some of their stacks into treasury plays or ETF plays so that then they can borrow against it and this, that, and the other. And so I think that's part of it. And of course, there have been these different news articles floating around. As an example, as I'm sure you know, there was one where someone sold like some huge stack of Bitcoin. I think it was like 8,000, or was it 80,000? I think it was 8,000 Bitcoin. Someone was selling like just this massive stack of Bitcoin that, it got absorbed, right? Like we didn't just insta dump 50% off of that, right? Like we went from like 125 down to like, I don't know, 115 or something like that. These were the kind of numbers. And so I think it's a similar thing. We are seeing this new kind of institutional bid, I believe. And that's why you're noticing the drops aren't as much these days. Now, of course, that's not excluding, like, we could see bigger drops, right? I've lived through them, and people should be aware. You can have big drops in Bitcoin, like 80% drawdowns have happened before. You should be at least open to that possibility again. Now, I think it's a lot less likely, to be honest. I think it's a lot less likely nowadays. I think now probably 50 or 60% is probably the most you would realistically see, at a guess, right? But it all kind of depends on how crazy things go. Like if we saw some crazy euphoria, then yeah, maybe we can have another 80% drawdown. But for now, we haven't had a crazy euphoria, right? Like this cycle has just kind of been like kind of grinding up, or kind of a move up and then consolidate for a while. And then we consolidate for a little while and then we take another big move up. And I think what it's just showing is just that more and more of these larger pools of capital are coming in. It's institutionalization. And so whether that's ETFs, whether that's, family offices and treasury companies and funds, nation states, sovereign wealth funds, we're seeing more and more of this. I think Luxembourg, the Minister of Finance, when it spoke recently in Amsterdam, talking about how they took a position in Bitcoin. We're seeing more and more stuff around sovereign wealth funds taking a position in Bitcoin. So, it's all just part of the journey. Now, I want to say, like, it's not just about that end. It's also like really fascinating what we're seeing on the MOE side of the question, right? So we've seen like Square and Cash App turning on 4 million merchants in the USA. We're seeing, I did a podcast recently with Karel from Money Badger in South Africa. They've turned on 700,000 locations where you can pay with Bitcoin in South Africa. And so we're seeing, I think in various ways, we're seeing wins across the board in both sides, right? Whether you're an SOV guy or an MOE guy, or we're just seeing wins on both sides of that. Now, yes, occasionally we take a dump, we take a dip, right? We're down at 95K or whatever from 125K. So people can say, oh no, we're 30K down from the top. But, so be it. That's life, right? We're just going to have to, you just have to earn your stripes in Bitcoin, and you have to go through some drawdowns on the way up. That's the price we pay for being able to hodl to some incredible gains in the future. That's how I see it.
And I also see a difference of people that have lived through crashes versus the people that haven't lived through crashes. So like the last big crash that I remember was 2021, going from the almost 70K to 16K or something like that, where it was like a huge selling point. And people that have gone through those cycles are a lot more relaxed currently than those who haven't gone through, like, as you said, like earning your stripes in that way. But I also found it interesting because the 100Ks, turns out, like, I kind of was saying, like, the 100K will be a huge buying opportunity. Like, will be a huge, like, mainstream media will wake up and like people will talk about the 100K because it's a round, big number. But actually, kind of opposite happened, where a lot of the people said, like, hey, I'm hodling since like 5, 6, 7 years. I made from like a few thousand investments to a few 100,000 or a few 100,000 to a few millions. And hey, I want to buy that home. I want to buy that car. I want to retire my wife, like whatever you wanted to buy with your Bitcoin. Totally fine. Like, a lot of OGs, as you said before, were maybe fulfilling their dreams, or maybe they were diversifying into other things. Like, I don't know what they're doing with those things, but it kind of was to the point where institutions and all those people came in, and then the OGs were selling kind of the IPO moment. I think from Jordi, it was originally, when I saw it, the silent IPO, how he named it, was really interesting to see. And this other thing that you mentioned, I think this is really interesting. Because we didn't have a blow off top, we might not have a huge crash. So like, I have to believe, and I'm curious what you think on that. If you're not having a huge blow off top at the end of the year, which it gets tighter and tighter with the days going on, it's no longer that many days left in 2025. If we don't have a huge blow off top, maybe 2026 will be like the first year where the 4-year cycle finally actually ends, and it will be an up year, which I think is highly likely if we don't have a blow off top in 2025.
I think this is what many people are observing now, right? If you had asked me a few years ago, I would have been a 4-year cycle guy. But now I'm kind of going against that. And I think, to be fair, this is not just like me. I think a lot of people are starting to be like, you know what? Maybe we were wrong about this 4-year cycle thing, or maybe we overrated its importance, right? Like, maybe there's some factor around the halving, but actually it's becoming less and less of a factor. And really what's more important now is just broader macro things, right? Like, it's just adoption and broader macro aspects that are really driving the adoption story, more so than the halving kind of thing. And maybe next year we are going to see just that up. It's going to be green, right? Instead of green, red, which is what many people would have, expected. And so, yeah, like, that's part of it for me, is just Bitcoin is growing up, it's maturing, and so it's not having the same volatility profile it did in the earlier years, and so that just means different things. Of course, I'm still extremely bullish, but it's just a different, it's growing in a different way, and I think that's just part of it. Is some of this is institutional money and funds, they take time to come in, right? I think maybe we sort of front loaded some of the gains in 2024. Like, maybe we ran up a bit higher than we quote unquote should have, in a sense of what the adoption was ready, like what was ready, how much adoption was really we were really ready for, because it takes time, whether that's governments and sovereign wealth funds and institutions and ETFs and all these different things. It takes time for all these things to kind of get ticked in the systems, compliance, and then even for the sales forces of those different organizations, or let's say financial advisors, to start recommending it for their clients to say, like, now from our perspective, this is like silly. Why would you only take a 1 to 3% allocation in Bitcoin or whatever? For us, we'd be like, no, that's crazy. You should be taking way more allocation to Bitcoin. But slowly but surely, right? So I think that's just the story. And so I think that's driving what we're seeing, which is this continual creep upwards. And then every now and again, instead of us paying the price in terms of like an 80% drawdown, you pay the price by having to kind of grind it out for a while. Like, maybe we just grind it out here for a little bit before we take another move up again.
I don't know. You've been long in the podcast game, so you have more data on that. But I have never seen more bearish sentiment in all my comments, replies, and DMs, and also less interest. I mean, this was always like, it's always volatile. Like, February was one of my weakest months, all of podcasting. Then I think June, or like maybe in September, like somewhere days, was like my best month ever in all of podcasting from my podcast. And now this is kind of a lull month, kind of average, a little bit low. But it's interesting when I see the comments, I've never seen more bearish comments, even from people that are used to be bullish in my comment section, which is really interesting. Have you seen the same thing, first of all? And like, can you compare those things to like past cycles where you also seen like very bearish comments and like, because you have been longer in the podcast game in Bitcoin?
Yeah. So, I mean, for me, well, to be honest, I haven't checked my numbers recently. So in terms of downloads, but subjectively in terms of comments and things I see online, whether that's comments under my podcast or just in general, I would say the sentiment right now is pretty weak. Or if you look at like these typical fear and greed index, now maybe there's a little bit of subjectivity in those, but they do seem pretty low. Like I saw some people comparing the fear and greed index numbers now are similar to what it was in like the 2022 bear market, right? Like the FTX bottom, you know, FTX was blowing up and all this stuff had happened that year, Celsius and BlockFi and Genesis and, you know, Three Arrows Capital and you name it. And, you know, the price went to like 16K, right, at that time. So now here we are at like 95K and people are worried almost to the same level, which is weird to me, right? And then if you went back, and the other big one that most people would remember if they've been around is the COVID bottom, right? Like that March 2020, like the price at that time was maybe $9,000 or $10,000 per coin, and almost overnight it went down to like 3 or 4K. Like that's massive, right? It was like a 60 or 70% drop overnight almost. So that was like a very brutal rundown. You know, this is comparatively very easy, right? 125 down to 95. What's that? Like off the top, my math isn't that good, but let's say 20 or 30% ish, 25%, call it. It's not that bad, right? So you can deal with it, right? So look, I think the main thing is just, you know, keep stacking. And to be honest, this is also like, you know, you might have seen this meme as well, the 40 HPW, 40 hours of podcasts per week. I know it's a meme, but I still love it. I think it's a great meme. Like unironically, the people who listen to 40 hours of Bitcoin podcasts per week have outperformed their peers. Why? Because they held conviction, right? They kept stacking, right? This is like the big thing. Like if you were, you know, in all these past cycles, if you just kept stacking, you kept going during the bear market, because during the bear markets and the dips, when you keep stacking, guess what? You're accumulating coins on the dip or coins very cheaply. And then later, the bull market resumes and you're extremely glad that you were stacking diligently at that time. So I think actually maybe this is something we all have to kind of do as a quote unquote Bitcoin community. Now I know there's no one Bitcoin community. There's more like multiple communities around the world, whatever. But DCA Army, right? The DCA Army is I know it's a colloquial idea, but just the idea is you should be a part of the DCA Army, like just regularly accumulating. And as long as you're onboarding other people to be doing the DCA Army. Now, again, I know DCA, again, colloquial, dollar cost averaging for you guys in Europe, euro cost averaging or fiat cost averaging, whatever. But the colloquial idea is just like, you know, you are just regularly accumulating Bitcoin. And I think that applies whether you are an individual or a company or, you know, some other entity type. You just have to keep accumulating during the bear and listening to Bitcoin content, whether that's podcasts or reading articles and newsletters and books and whatever. It helps you because it helps you remember why you're here and zoom out, right? Because that's the other difficulty with this. It's very easy to get caught up in your emotions of, oh no, we're down 25% from the high. But you have to zoom out. You have to remember, what is the fiat system going to do? The fiat system is going to keep printing, right? Like it or not, what are they going to do? They are going to print. I ran a quick AI query the other day. I looked at the top 10 nations in the world by GDP and what is their debt to GDP ratio. Off the top of my head, I think it was 7 of the top 10 had a debt to GDP greater than 95%, right? Like, so it's just astounding how much debt there is. And the incentive is so clear that they are going to keep on debasing. Now, of course, they'll call it different things. They may not call it QE. It may be called something else. But bottom line, are they going to expand central bank balance sheets over time on average? Yes, they are. What does that mean for broad money? It's going to expand. So therefore, your dollar or fiat purchasing power is going to go down over time. And you just have to be able to weather that storm and wait through for that cycle to turn. And as you keep stacking in the bear or in the sideways chop, eventually it comes back, and then you're just and then we sort of get back to the the other side of the thing. You have to watch for the euphoria phase, but for now we haven't had that.
I don't know if it's a legend thought, but I almost think we've lost our laser eyes, because this was always laser eyes till 100K, and now we need a new meme to get to $1 million.
Maybe. Well, I've still got my laser eyes on, although I was intending to take them off, but now that we're back under 100, I should keep them on until we get over 100 again, and then I'll take them off. Yeah, I mean, I think one thing is, in earlier years, it meant something more when you were a Bitcoiner, and you sort of had more kind of camaraderie, let's say. Whereas now it's almost like there's not even that many common enemies, in a sense. Like, okay, yeah, you could say certain, like every now and again online, at least in terms of online, there's not that many people online who will explicitly argue against Bitcoin, other than the occasional, Peter Schiff or someone like that. And even then, they're kind of rage baiting, like they're not, like they're kind of just doing it because they know they're trying to provoke or troll Bitcoiners. Whereas in years gone by, there were a lot more people who would actually seriously argue against Bitcoin. Whereas now, maybe that's also a factor. Like, it's just Bitcoin is maturing. And so the memes and the culture are sort of a little bit different to what they were in earlier years. Not saying I like it or hate it. I'm just trying to neutrally observe. Like, that seems to be what's happened. There's maybe not as much of that kind of diehard maxi sentiment. And I mean, look, I have to put my hand up and say, I was part of that diehard sentiment in earlier years. And I don't know, it just feels like people have kind of chilled out a bit more. Now, to some extent, some of that is because people went off to Nostra, or there's been some kind of splitting and fracturing in some ways. But I think part of it is also just a maturing, right? It's just Bitcoin is maturing. It's just not as crazy wild as things were in early years. Even though, look, lots of exciting things are still happening.
It's so interesting. I just talked with Dad about that with Thomas Strohlight, and we kind of talked about that concept that we always had huge enemies, and we always had like something that we fight about on Bitcoin with someone else outside of Bitcoin, and it seems like all of those common thoughts are now gone. So we no longer have the environmental things. Like I really rarely hear it anymore that Bitcoin is bad for the environment. Like really, really rarely. We don't have the gold bugs. Like a lot of gold bugs like have Bitcoin now also, or completely switched. Real estate people coming to Bitcoin. I mean, Grant Cardone, like, is one of the recent examples. Like, it seems like all of the buckets of TradFi are now recognizing Bitcoin as legit. And now we started infighting about like op return and all, like, right, because we have that fighting mentality still in there. And now we're like, oh yeah, like, let's find something else to fight on, which was a funny observation for me at least.
Yeah. And I will say, look, people have been fighting internally about lots of things, for a while, right? Now, of course, there was block size wars, but even just kind of, there would be kind of low level skirmishing going on all the time, right? Like, the coin join implementations, right? Samurai versus Wasabi, and then kind of join market off to the side. There'd be hardware wallets fighting each other. There would be, all kinds of different arguments in Bitcoin land. Although now, yes, there's a lot of, in, let's say, the online Bitcoin, echo chamber. Yes, there's a lot of argument about knots versus core. But the funny thing is, if you look at, like, I think Alex Thorne tweeted this or posted this recently, saying he works with certain institutional partners and customers, and many of them were either pro core or not really, caring about this debate, or either not knowing or not caring about this debate. So I think there are times where, as a online echo chamber, people sort of spiral off into their own little purity spirals, and they're kind of talking about things that they think are so relevant, or they think they are the most relevant faction within Bitcoin. But actually, there's like a lot of the big money and other players who don't really care about that. Because it's maybe not that interesting to them, that's, so be it. But I think there are times where, like, people sort of lose perspective because they think everyone around them has the same view. So other people outside their little circles also have the same view, but it's just not accurate.
I was just in Amsterdam. I actually just came back 2 days ago from Bitcoin Amsterdam, and I realized afterwards that nobody talked about it.
Yeah.
I had so many conversations. It's all like, we never talk about the price. Like it's like, I love, being on Bitcoin, conferences, because it gets so great conversations, and it's, rarely about the price, even when the price, as in those conference, went down. But the block size war was not even close to be a small discussion. In Bulgaria, like a month ago in October, it was a discussion, on and off stage also. It's like also sometimes there's a difference between on and off stage. But I don't know, it seems like the peak of the discussion seems a little bit over, but maybe I'm wrong. Let's see what happens.
Yeah, I would say what you'll find is there'll be kind of little moments where it goes crazy and then it kind of drops again, and then it kind of simmers for a little while and then it can kind of flare up again. Like, I would say it flared up earlier in the year and then it kind of drops down again. And then in the last, let's say, month or two, it's really going hard again, at least in the online echo chamber, not necessarily in that. If you think about the onion, that kind of inside layer of the Bitcoin kind of echo chamber is going hard fighting about this, but like one or two layers out on the onion, they're either not caring or just pro core in their mind.
Is there a potential soft fork that you could imagine that something like that happens?
So right now, it seems like yes. I don't know if they're going to be talked down from the ledge per se. I know they have switched the proposal a little bit. So, I mean, it's difficult to talk about in some ways because there's different camps and different groups. So the way I'm seeing it is you've got the knots camp, right? That's, but even inside the knots camp, there's, people don't all have the same view. And then there are people who run knots, but they're not necessarily in favor of RDTS, right? Which is the reduced data temporary soft fork. Which I think was incorrectly being called BIP 444, but that was kind of like the meme name for it or whatever. But anyway, RDTS and knots. And then you've got like Core, who are somewhat in the middle. And then over on the other side, you've got like Libra Relay side, who are like more liberal than even Core is. And then you've got, let's say, the spammers, like or I call it retardinals, as the catch-all term for ordinals, inscriptions, BRC20, and other spammy meta protocols. Stamps is another one. So you've got like the spammers, like Casey Rodama and all the people who are doing like ordinal, retardinal, inscription stuff. And you've got these different camps of thought. And so when RDTS first came out, it was like really crazy. Like, it had this reactive soft fork idea and then a proactive soft fork idea as well. And like just all the all this language that was interpreted to be kind of having like a legal threat element to it, or I don't know, sort of. Yeah. So yeah, and that was initially going to be done as, I believe it was a flag day for like early February, but now that has shifted back. So I think last I heard, I think it's going to be like a MASF style, so like a minor signaling, and then into a UASF. I still believe, look, as things currently stand, it looks like to me like there's insufficient support. It looks like this idea is highly contentious. A lot of people are against it for various reasons. One is that it cuts down on genuine monetary scripting capabilities, things like op if inside of TapScript, which also has impacts on miniscript, which is not a shitcoining and spamming thing. It relates to, it can relate to us doing inheritance or redundancy and security protocols for self-custody. So that's one reason. I think the other reason is just that we can't stop arbitrary data. So I think it's going to end up just a lot of work for not even stopping the spam. So I just think we need a better approach, and that is not necessarily like cutting down opcodes. It may mean more like, hey, we actually need to do better with driving monetary demand for on-chain transactions to price out the spam. And just, I think to some extent, again, this may be unpopular in the echo chamber, but I think sometimes in life you have to bite the bullet, right? Because the other ways that you try to fight it back will end up having a worse outcome for us, right? So I'm not in favor of spam. And again, for the 1,000th time, I get accused of being, having interest in spamming or shitcoining companies. I receive no sponsorship from any shitcoining or spamming companies. I have no investment in them. I have no financial interest in spamming or shitcoining. My interest is as a Bitcoiner, but I often get accused of that. So I'll just, again, say it for the 1,000th time. And I think people are just kind of getting too angry and burnt up about this thing that's really more like a nuisance. And I think it will go away for the most part, or it won't stop genuine monetary adoption, is my view. Now, yeah, they would say, they make different arguments about, okay, hard drive space and internet connectivity, and what about the third world? and they'll make various arguments about that, or they'll say, okay, it's decreasing the quality of money, etc. Now, look, I've heard many of these arguments. I can't respond to all of them in one quick go, but I think the gist of it is we need to just focus on monetary adoption. Don't worry as much about this content spam. I think it is at this point, it's where there's not a lot that we can do to stop it in a principled way that doesn't hurt us in something else, right? In terms of decentralization, in terms of monetary scripting capabilities, for genuine money. I don't mean for shitcoining. And I just think we just have to sort of bite the bullet there and accept certain risks. I also think people are being misled. I think there's a lot of people being misled to think that it's like some big new risk now with V30 somehow, when for the most part, I think a lot of these risks were pre-existing, or they are not the fault of core, right? So as an example, with Libra Relay, which is a more permissive form of it's a Bitcoin node software that is even more liberal than core is. And to an extent, a small number of these people running Libra Relay can really change what's possible on the network per se. And so I think there's just a fundamental asymmetry, right? There's this tolerant minority idea that whether we like it or not, it's there. And so I think sometimes we just have to accept sometimes harsh sounding truths instead of, I think what I'm seeing a lot in the NOT and or RDTS camp is what I would say is wishful thinking. There's a lot of this kind of wishful thinking of, hey, what if Libra Relay just didn't exist? Or what if the spammers just didn't do this? Well, I think this is not correctly modeling what spammers will do, right? So I'll give you another example. A spammer doesn't necessarily care about the defaults in your software, right? Like a lot of this argument has been about V30, the op return limit. Remember, this is a default change. So people are arguing about what is the default setting. You can just go in and change it manually. And there were examples where spammers have done this, right? So I think people are getting too angry about what is effectively a default. It's something that was already a changed behavior in the network anyway. So I think people are maybe unfairly blaming Core. But I will say this. I will say Core have not been perfect on this either. I think some of their communications has been poor. Some of their messaging has also been poor a little bit on like when maybe people try to make these arguments of like, what even is spam anyway? And to be fair, that might be more, not necessarily Core devs themselves, but more like Core supporters. I've seen some of them say this kind of argument. Or I'll give you another example. I disagreed a bit with Greg Maxwell's argument around distributed authoritarianism. Like I thought that was a bit of a clumsy framing. Of course, very high respect for Greg Maxwell in general. I like his arguments in general, but I think that distributed authoritarian framing was maybe a bit awkward or a bit clumsy. I think a better way to frame that would be more like, if it's fine for you to run whatever filters you want on your node, but to try to control what other people do on their node, that's the quote unquote authoritarian part in his view. I think it's just a bit of a clumsy wording though. But I think that's probably the more steelman point that he was trying to make, which is that, look, if I like vanilla ice cream and you like chocolate ice cream, we can both eat our separate ice creams. But in the case of the filter camp, it's sort of like they sort of they believe that no, it's like you need to eat vanilla ice cream as well. You know, they can't just I eat vanilla, you eat chocolate. It's not like that, right? Now they would argue no, that's because you're defending the monetary, aspect or nature of the network instead of turning it into a shitcoin and spam network or whatever. I just think there's different arguments there on like how much is actually possible, right? Because in theory, I mean, sure, if I could just press a button and have only monetary data on the Bitcoin network, yeah, I would press that button right now. But unfortunately, no such button exists. And I don't think, idealistically chasing that goal is going to help us overall when there are these other real world things to contend with. Things like, okay, what does it mean for block propagation? What does it mean for what does it mean for monetary scripting capabilities? What does it mean for these other elements of Bitcoin? What does it mean for the censorship resistance of Bitcoin?
I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. washer, all 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use simplemining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together.
It's so interesting because it's only on Twitter and it's only sometimes when I make those posts, because I always say run node, like run a node, not nodes. It's sometimes hard to distinguish just saying it out loud, but do run a node. And I don't even care which one, but I care that you study them and make your own assessment of what you want to run. And I say that because I don't want a bunch of people running core or a bunch of people running nodes just because I say so. I rather have a bunch of people operating a node and actually knowing what they are doing. Because I do think if you are just a voice in Bitcoin that just does what some influencer says, you don't really have a voice or a vote in the network. And so I always argue for having people in the network that actually think what they want from their node. And that kind of stance got me attacked a lot because people say like, oh, like you're just afraid to make a stance. And I think in the past, I've made many different stands that kind of prove that wrong. But anyways, I really think it's very important that we have a lot more nodes running, and especially nodes that are operated by people that actually think and are economically nodes and use nodes that are actually connected to wallets and actually do something. Now, every node is great. Like every one that is like having more nodes in general, I think is positive. But I would rather have more nodes that actually do something with it and are actually an active participant of the network. And this is a hard stance because it's like, oh, like you're just defending. Like, no, I just want you to run a node and think for yourself which integration. And if you do that, I'm happy. And also, if we all have critical thinking people that run nodes, then the best integration ultimately will win, whichever you think this is. But if you're on the right side and we all think critical about like what is the best integration, the best integration ultimately will win. Or maybe it's fair to have 2 or 3 integrations running side by side, and not one has to have 100%. Maybe we can have 40, 20% with like different integrations. I don't know. But I just want to have more educated people running a node, and not just like, oh, I run nodes because he said it to me, or I run core because he told me to. I'm like, no, like have a reason why you run it.
Yeah, and even on the whole different implementations thing, like, of course, over the history of Bitcoin, it has kind of waxed and waned over time, right? Especially during the block size wars, there were people running like Bitcoin Unlimited and Bitcoin XT and whatever, these other ones, of course. But even on this point around different implementations, what's happening there is some of the guys in core are trying to work on this project. I did an episode recently with this guy called The Charlatan, a Bitcoin core developer, and he's working on this project. It's known as libitcoin kernel, but it doesn't have to do with libitcoin, which is a separate implementation. I think people are trying to call it Bitcoin Core Kernel Project. And the idea is you could have this way of like calling out to this component inside of Bitcoin Core to tell you, is this valid, yes or no? And other parts in the ecosystem can do that to still check that they are consensus valid. And so this would actually allow people to run different or to create different implementations in the future that are still consensus compatible. Because the reality of it is, the practical, technical reality is it's very, very difficult, some even argue impossible, to make competing consensus compatible implementations. And maybe that's also why for so long, Bitcoin Core has just had this, near monopoly, not full monopoly. But as I said, it waxes and wanes a bit, and there are other implementations out there. I know, for example, BTCD is another one that's like totally different, and they are providing different kind of features. And I think, for example, U3XO is an interesting project that's being kind of built into BTCD, or like kind of as a fork off of BTCD. And then that is a really interesting idea too, because I'll give you a quick example. In the future, they could have special forms of this using U3XO and U3XO based models where, quote unquote, grandma doesn't have to run, like, go buy an Umbrel or a Start9 or a whatever Ministry of Nodes node box or whatever node box. They could just have like a phone app that checks U3XO proofs. And so then they would be like a validating client, but with very, very low download. So that's kind of in the future. That's where some of this stuff could go, right? If you have U3XO, or if you have other techniques that some of the people are talking about now, one is called Swift Sync. So it's like this idea of parallelizing some of the validation, I think, to make the Bitcoin node IBD, initial block download, faster. So these are some of the ideas that being thrown around that can help people to be a validating person in Bitcoin without even like, now, yes, there are some trade-offs or some elements there, like U3XO or Floresta, as an example, relies on there being some U3XO bridge nodes. But to be clear, you're not trusting. It's like using, like cryptographic proofs to know that, yes, you really do have coins, right? You're not just like, it's not trust me, bro. It's actually, you have been cryptographic. You're getting certain cryptographic assurances that you have coins or UTXOs. And so the proverbial grandmas of the world can just use an app without really thinking too hard about it. Whereas, let's say, power users and people who are really into it, of course, we can run our node and do everything the full proper way. So, these are some of the things around that. Of course, don't forget, hard drive and internet costs and compute costs are coming down over time, right? Like, that's another factor, right? The block size only grows in a linear way, right? Maximum 4 megs per 10 minutes on average. But actually, it's less than that. It's more like 2 point something megs per minute. In practice, hard drive and SSD cost is coming down. Internet connectivity is improving all around the world. So I think it's a very nuanced topic, and it's difficult to quickly explain some of these different aspects of it.
Is it overall a positive sign for the strength of the network that we have those debates, and that there are strong opinions on a topic that is not as fundamental as, like, lifting up the block size limit as we had in 2017?
Well, I think there is an element of, yes, it's good that people are learning about these aspects of it. I think what we've seen is people are kind of like really arguing with very strong opinions, and they're kind of doing a Dunning-Kruger, right? Like you ask a few questions to them, and they don't kind of have an answer to those things. And it's clear that they've just kind of taken what some influencer told them without sort of really reading and trying to understand that. And so that's something that I've noticed, that we're seeing some of the people who are a bit newer into Bitcoin. Some of them, now, to be clear, there are some very highly technical, knowledgeable, OG, long-time Bitcoiners who are in this kind of not denied ETS sort of camp. I'm not saying all of them are like that, but I'm saying a lot of people who are sort of in this kind of seeing it as like a I need to virtue signal for my team kind of thing, as opposed to like really what is the truth of the matter. And I think some of that is because it gets emotionally charged, like some of the arguments that have been brought up can be very emotionally charging, as opposed to like people rationally discussing, well, what is the risk? Is it a new incremental risk, or is that a risk that already existed? Right? Like, I think these are some of the things that people have to sort of step back and really assess. But yes, people have had to learn a lot about different aspects of how Bitcoin nodes work. So in that part, I guess the silver lining is, yeah, there are people who've had to learn more about Bitcoin. So that's good. But I think some of that could arguably be counterproductive in that it's kind of cutting away from some of the other things that we could be talking about, or maybe it's kind of sucking up attention and energy that really, maybe that's not the best thing. Like, maybe we would be better off, trying to get more merchant adoption, or trying to teach more people about, self-custody or some of these other things. Or some people would even talk about, is that distracting from actual bug fixes in Bitcoin? I'll give another example, the consensus cleanup. That's a soft fork proposal to fix some long-standing, well-known bugs. It's been proposed, I think, 6 years ago by Matt Corallo. That's an idea that people could be talking about. Even if you're like not in favor of like new functionality, consensus cleanup is more like a bug fix, right? So it would be like trying to, if we talk about being low time preference and fixing bugs and making sure Bitcoin is robust and reliable and secure and decentralized and all the things that we normally say, then yeah, maybe we should be talking about consensus cleanup as an example. Or other people might be more interested in whatever, covenants conversations, or something else, who knows. So yeah, and I think some of it is, I'm going to say, unnecessary friendly fire. I think I've seen a lot of people just kind of really getting angry, and kind of hurling a lot of insults. And of course, I'm not perfect in this. I'm hurling insults and receiving a lot of insults too. But I think some of it is unnecessary friendly fire, that people are kind of getting angry about things that are sort of outside. I think some of it is people are blaming, as an example, people are blaming core devs for what like spammers did, basically.
It is an interesting topic, but yeah, I do agree. It takes a lot of space on, and then I'm basically at fault here myself because I brought it up. so it's like I also
that's
do that.
Okay.
But I think it's interesting because it just was such a huge debate. But I feel like it's not over, but the emotional component got less. Like people still talk about it, but it's less emotional. The amounts of amounts of comments I got in the beginning when I didn't even cover it, of like people telling me I have to cover it, was tremendous. Now people are like, it's less, but maybe it's also just volatile. But one thing I really want to make sure we talk about is we didn't really talk about it in the beginning a little bit, maybe, is treasury companies. And now I'm curious how you think about it, if that's a fair assumption. There are, for me, like 3 different kind of treasury companies. There are those that have a profitable business and they just put Bitcoin on their balance sheet. Like by definition, for me, this is also a treasury company. Then there are those treasury companies that might not have a profitable business, or maybe only a small one, and the big portion of their business is accumulating Bitcoin with various instruments. And then the third category is, for me, strategy. Like for me, this is like almost an own beast, like something in like
one
in
of
their
one,
own,
yeah.
one of one. Like it's kind of hard to compare the other companies to what strategy did over the past 5 years. Is that a fair assumption? How would you kind of like explain those like different categories?
Yeah, so I think I'll put it this way. Yeah, absolutely. I agree that strategy is one of one, right? It's almost impossible. It's very, very unlikely that anyone's going to catch them at this point. They've got whatever 640,000 or some ridiculous number of BTC. I don't think anyone's going to catch them. But in terms of the model, I think both can work, right? Whether you are an operating company stacking Bitcoin, or whether you are a quote unquote pure play, I think either strategy can work. Put it this way. you and I and most listeners, we're Bitcoin maxis. We believe Bitcoin is going to be the money of the world. We believe, I would say, fair assumption, most of us believe it's going to hit $1 million someday, and someday it's going to hit $10 million per coin. So if you believe that, then this is the asset that you can build a business on. And so if you are thinking of it like, okay, well, if I can borrow fiat at, let's say, less than 10%, like I mentioned, depending on the asset and the different conditions and so on, and the terms, then it can make sense to do this play. Of course, I would not recommend, I mean, I'm a maxi, so I would never recommend shitcoins anyway, but I think the shitcoin treasury companies are, they're cruising for a bruising, basically. They're going to get wrecked, right? Because they don't have the same network effects that Bitcoin has. They don't have the underlying growth engine of Bitcoin. And here's the other thing I would say. Let's say you start with an operating company that's just stacking a ton of Bitcoin. Given the incredible growth rate of Bitcoin, it might be that you effectively become a pure or close to a pure play, right? I'll give you an example, right? Strategy started as, they were mainly known as like a BI data analysis platform business. Then they started stacking Bitcoin, and now they are seen as the one of one pure play, because their business intelligence and data analytics side of the business is so small relative to their whatever 65 or $70 billion balance sheet of Bitcoin. So I think over time, if you stack Bitcoin hard enough, it eventually, that Bitcoin side of it does a lot of the heavy lifting, and it will raise you higher up in the index position where your business is, or your stock or your company is, depending where you are in the world, what indexes and so on you're on. So I think either model can work. They just have different pros and cons. Now, maybe the operational company, maybe they'll have a slightly easier time of it in the bear markets, let's say in the Bitcoin bear markets, because they can be stacking more in the bear. But let's say the pure play style, the style who is doing like full financial engineering, they've got different tools in their toolbox too, right? Again, depending on jurisdiction, depending on the asset, depending on how they do things, they can have an equity ATM or some ATM-like structure. They can have debt. They can be taking convertible notes. They may eventually look at doing preferred equity, preferred shares. And so there's different tools in the toolbox that, as an example, they may take on some debt, right? Convertible note, this kind of thing, if they can get it at a very low rate. And crucially here, it's important that they take it on at good terms, not at bad terms. Like if they take it on, like good terms would be like longer term debt, lower interest rate, less covenants and conditions. And obviously on the bad side of that is if you take short-term debt with high rates, with very restrictive or cumbersome covenants and restrictions, then that's bad, right? And so the skill of the operators of that treasury company, it matters, right? They need to take on good debt. They need to kind of be a good captain of the ship. And so as an example, just to give an example, some of these companies could start with some equity, then maybe take on a convertible note. Now they've got debt in their balance sheet. And theoretically, if you have some debt, like if you just run the numbers, if you have some debt and use that to buy Bitcoin, and you've got a long enough term on that loan, you're going to outperform Bitcoin. Just based on, you can outperform Bitcoin depending on the conditions, right? And then that can justify some MNAV premium. And then guess what? Once you have some MNAV premium, then, okay, so now you can issue equity ATM at the market to now buy more Bitcoin. And so it's sort of like, as long as it's managed well, then I think either side of the playbook can work. And I believe there will be probably one or two or a few winners in each big jurisdiction. And of course, strategy will be the winner globally. But I think there will be reasons why local laws, regulations, even customs, or even just sort of cultural feelings towards a local homegrown team, they may be able to do something that a big treasury company from outside that country can't do. So we'll see what happens. But I believe there is a market for both of these things, for pure plays and for operational companies. But the caveat is it still needs to be managed well. The way it's managed, the way it's done matters, right? It's not that all treasury companies will go to the moon. You have to choose your spots correctly.
That's how I look at more and more, because I feel like, every stock has risks that Bitcoin doesn't have, even if the stock primarily does Bitcoin. like management team, like the leadership, like and like all kinds of like there's like all those 10Qs and 10K filings that you see with a company where there's a risk section where you can see pages and pages of what risks are associated with a business. And I highly recommend for people to, if you even consider buying a stock, like you check this out once. I come, funny enough, before Bitcoin, I was a big stock guy. I was into many different stocks, and I loved it. And I stayed up late to see the conference calls and all of that. Like I read the 10Ks while being in school and should have listened to history classes. Was a fun time. And so I was naturally like inclined always to like buy stocks, and now kind of those two things kind of collide inside. And how I look at it, if the management team of that treasury company is great, it's basically like an amplifier to Bitcoin. And so it's a small position for me that I see like, hey, there I can have an amplified Bitcoin. And I'm more and more convinced that strategy might just get to be the position of one of the biggest companies, and maybe even the biggest company. Like if you believe that Bitcoin is global money and everyone will have to adopt it, is it not naturally that strategy with the most Bitcoin, so the most global money on the balance sheet, might just be the biggest company? I mean,
yeah, I think so.
I mean, there's still like, is there a chance that, I mean, I don't think like a small treasury company, but is there a chance that like a Tesla wakes up, or like an Apple wakes up, or like one of the big, or maybe even Berkshire Hathaway, I don't know, like it's very hard to see that one. But like one of those that have big profit machine or have a huge cash pile that wakes up and like does a quarter of silent crying of a lot of Bitcoin or something like that, they might catch strategy.
So it's unlikely, I think, because I think a lot of the shareholders would not get on board, right? As I'm sure you saw, this might have been maybe a year ago now, or maybe 9 months ago. Seyr gave a talk at Microsoft and was trying to teach them, hey, why should you buy Bitcoin on the balance sheet? And it got like 0.55% of the shareholders were saying yes. So I think it's a similar thing, right? I think even if some of the current, like, I don't know for sure, right? But there's been kind of speculation that a lot of these like big tech CEOs, they personally hold Bitcoin. It's just that they feel like it's not ready for the business to do that, right? Or maybe their shareholders wouldn't be, willing to do that. Now, interestingly, Meta / Facebook or Zuckerberg is an interesting position there, because I think he has a similar setup with Seyr, where he has a lot of the voting control, even if he doesn't have the 51% ownership share. Or I don't know the exact numbers, but I think he effectively has enough power to try to push it through. So that might be an interesting example if they were to do it. I don't know if they will. So the short answer is, part of the reason no other big company will catch strategy is their shareholders haven't been brought on the journey, right? Because they would have to be starting from zero on that whole journey all over again, right? Michael had to go and talk to his C-level and his executive, like his board, and he had to get his shareholders on board with this, on this plan and on the journey. And I think early, if you rewind back like 5 years or so, I think they did something to sort of give those shareholders a way out, right? If they weren't on board with the Bitcoin strategy, I think he sort of gave them a way of like, look, if you don't want to, okay, here, we'll buy back your shares and you can be bought out that way. And so then he sort of has a very aligned shareholder base. So I would say that's actually an interesting point on why it's going to be hard for anyone else to catch him. Now, okay, hypothetically, could a nation state do it if they were to just like print fiat and buy Bitcoin? Maybe, but again, unlikely, right? So for that reason, I think strategy is going to end up being the most valuable company on earth, and Seyr will be one of the richest, if not the richest man on earth. We'll see. I mean, it could be a race between him and Elon on how big Tesla gets or something, but yeah, I think that's kind of how it's going to play out. And so I think part of this is just, if you're that bullish on Bitcoin, well, then do you believe there's also an accounting and finance perspective? Do you believe that some of these treasury companies can use the fiat system and leverage created inside of the fiat system to stack more Bitcoin? And that's the question. If you believe that, well, then, yeah, maybe it can make sense to dabble a little in treasury companies. At least that's how I'm seeing it. So to be clear, I still see it as like most of your Bitcoin allocation should be like cold storage, multi-sig Bitcoin, locked away for the long term. But with a small portion, I think it's okay if you choose to kind of dabble in treasury companies.
It's funny. I also see Tesla as the only real competitor if Bitcoin becomes global money and it's like a long enough time horizon and strategy keeps on executing and all those ifs associated with that. But like if all those things go on, Tesla is kind of like the only company that I'm feeling like with the huge investments in AI and robotaxis and robotics in general, they might be a huge revenue company, so they might actually deserve a premium on that, and they already have a little bit of Bitcoin, so they might also start accumulating more. But still have a hard It will be interesting to see the race there. I mean, Elon Musk has
and Nvidia is obviously another big elephant in the room. I mean, they have done. I think I checked the numbers on this. I think over the last 5 years, I think they've done like a 13x. Right, like that's just massive for a normal non-Bitcoin thing to do that. So obviously that's been a pretty big one. I don't know how much more. Like I still think Bitcoin is probably going to outpace that, but I mean, who knows, right?
But there's also like one really big thing that we have to kind of address when we talk about those three companies: Strategy, Nvidia, and Tesla. Tesla is 20 times as big as Strategy, and I know those numbers because I just looked at them out in the morning today. So Tesla is 20 times bigger than Strategy, and Nvidia is 80 times bigger than Strategy from a market capitalization. So if you see those three companies and you think like, oh, those three companies might have a chance to be the biggest company. I mean, Nvidia currently is the biggest company. Then you're like, I know where the biggest opportunity lies within those three companies, because like Strategy is like, what, 50 billion, 60 billion, something like that in market capitalization. And Nvidia is 4.6 trillion. I forgot that right. Something like that, 4.7 maybe. There's a huge difference between those things and like the current size and what the future potential with that current size is.
Yeah, I mean, it's just simply coming off a lower base, right? So yeah, whatever if they're off the top, I could look it up, but it's probably like 70 or 80 billion. But yeah, I mean, it's just mind-boggling to think about, because they're just growing so dramatically, and so few other people are really trying to catch them, right? Now, yeah, there's a few others out there trying to, but just not that many. So yeah, so we'll just see what happens there. But I think there will be some pretty good competition all around the world, though. There'll be a competition for number 2 and number 3 globally, and then there'll be a competition for, let's say, biggest in their local market. And then, yeah, actually, I just checked it. It's about 60 billion. Yeah, so their market cap is about 60 billion. So you're right there currently. So we'll see what happens.
How do you, because you talked about it briefly, how do you see the nation state adoption for Bitcoin? Specifically now, them acquiring Bitcoin. We have seen the Czech central bank, I think was last week, and $1 million experiment or something like that they made. The Luxembourg, was it Luxembourg? I think Luxembourg.
Yeah, I think it was
Luxembourg.
Luxembourg.
Spoke on the Bitcoin Amsterdam one. Obviously, Trump and the USA and El Salvador. So like there are multiple players actually now. How do you think that the kind of race is also happening, and is it similar to where in 2020 started with Strategy, and then like the PayPal coming with like, I still remember when PayPal buying like $50 million of Bitcoin was a big thing. Now it's like company buys $50 million of Bitcoin is like not even used at that.
That's a Tuesday for MSTR, or Monday for MSTR,
Yeah. But is this that kind of fair comparison of like nation states 2025 is like what treasury companies were like in 2020?
Well, I would say this. I think just like in Bitcoin, companies sometimes go through their phase of blockchain, not Bitcoin, and we need to mine it first, and whatever. Nation states can do that too, right? When oftentimes for most people, the best thing is to just buy it, right? Like just buy it and hodl it, and just just sit on it and just accumulate more if you can. That's generally for most people, like we all kind of have this regret of just not just buying more of it early and just hodling. That's just number one. So I think a lot of these nation states will try that. Now, some of them may not have a lot of fiat, but they may have excess energy. So then for them, it may make more sense to do the mining play, or to like JV or do a public-private partnership with some, big mining company and do it that way. Bhutan is obviously a good example there, where they have a pretty good, let's say, sats per citizen, right? They've got a very high number per citizen compared to other nations around the world. And of course, we are seeing different nation states and sovereign wealth funds do this, right? So we're seeing different sovereign wealth funds are engaging in Bitcoin and Bitcoin ETFs, and some of them, some of these different entities are looking at MSTR shares as like a proxy or whatever, or maybe they want the exposure, the leverage exposure, or amplified exposure. So yeah, I just think it's a natural process. They will start with dipping their toe, as you mentioned. The Czech National Bank did about a $1 million worth of, but not just Bitcoin. I think Bitcoin plus probably some shitcoins for all we know. But my guess there is they are probably also looking at it from a quote unquote RWA or tokenization perspective, right? Because they would think, oh, if we're the central bank of Czechia, we want to be able to do debt issuance in a tokenized form to support our government, the nation state. And so maybe they want to look at like the tokenization side of it. So I'm guessing they're also looking at the quote unquote blockchain, tokenized debt sort of applications of it, as well as obviously some Bitcoin exposure. So I think that seems to be what they're looking at. So maybe that's the way things go for them. And of course, they're trial running. And who knows, if Bitcoin hits a 2x, then obviously it's going to be a lot easier for them to kind of make that case of, oh, yeah, we should actually hold some in our reserves or whatever, which I thought was really fascinating because, to my knowledge, that is the first central bank that's actually bought Bitcoin. It's not, like at first we think Bitcoin is challenging central banks, and I believe it still is. But in a more, setting aside my libertarian leanings for a second, if you zoom out and just think objectively, like economically, a banking system can be thought of as being quote unquote backed, or the safety or the security of that system can be thought of as what assets does the central bank hold? All right. And this is part of why a lot of central banks hold gold, right? Because historically that was seen as like a backstop. It was seen as like hey, should the system fall, the central bank has X number of tons of gold. I think in the future it's going to be how many Bitcoin, what's the BTC stack of that central bank. Now, of course, from a purist libertarian perspective, abolish all central banks everywhere. Let's just have fully free market money. But in terms of like the real world that we live in today, yeah, that's probably part of the journey. That's probably part of the process for some of these nation states and central banks, is that they will start accumulating Bitcoin in small, parcels to start with. And then eventually, let's say 20 years from now, 30 years from now, it'll become a much more serious thing.
I look at it that way. If you want to stay relevant, you have to buy Bitcoin eventually, no matter if you're an individual, company, nation, state, or central bank. And I guess the Czech the national bank wants to stay relevant.
Yeah, exactly. And I think this is where, like, from as I'm sure you've been at BTC Prague as well, right? Like when you go there, you just get a sense that a lot of Czech people really know about Bitcoin. It's kind of already a thing there. They got this legislation changed. I can't remember the exact number, but I think it's if you hold Bitcoin for 2 years, or maybe it's 3 years. I think they changed the law recently. So if you hold Bitcoin for more than 2 or 3 years, someone check the exact number.
3 years,
yeah,
is it?
Yeah, right. 3 years, you get no capital gains tax on your Bitcoin, right? And it's kind of seen as like, there's that company, I think it's called Querco, Qerko, that a lot of the restaurants have. It's like a QR thing where people can order their food and pay Bitcoin. And that's like quite a ubiquitous thing. You'll see it just around Prague and probably around Czech Republic in general, as well as some restaurants and cafes and whatever who just take Bitcoin straight up. So I think because it has been, let's say, become part of the social culture, maybe that is what made the central bank more open to this idea. And so maybe there's like a social benefit there that if you get more adoption in terms of merchants and people actually using it in the real world, like physically, brick and mortar, then it maybe has an effect of changing, like improving the mind share of Bitcoin, getting more people to think of it as like, hey, it's just here. It's just a normal thing. It's not a subversive technology, although you could argue it is that in the long run, but they don't perceive it as one because it's just used by everyone, right? Like maybe in the early days of the internet, it was seen as like this weirdo thing, and now you would be crazy if you don't use the internet, right? And so I think it's just a similar thing. It's just naturally becoming normal, and perhaps we could argue in the Czech Republic or Czechia, it has already been normalized to some extent.
I like Czech a lot. I mean, not only because like it's very close, like it's literally on the border of Austria where I live, and so I always look a little bit at Czech also because like I always also feel like we should always consider our options where to move if our current country is not doing great. And Czech is actually on my list, not the highest, but like it's on my list because of the tax-free thing. Germany also has that, by the way. It's a year actually in Germany. Austria had it, and now in 2021 they abolished it, which I still am mad about, but I cannot do anything against it in the short term. And Czech also has like Treasury, Brains, Satoshi Lab, Vexel, like they have like big companies actually. I think Treasury was the first hardware wallet, if I remember correctly, from Czech. Brains was the first like mining pool. So like there's a lot of innovation actually going on and of course BTC Prague, the great conference that I've been since the beginning. So there's a lot of not just like from like a grassroots movement. There's also like just a massive level of companies and activities going on there. And in Prague, because there's the Bitcoin Prague and there's like a lot of activities, you can actually pay in Bitcoin on multiple occasions. And it's actually not that uncommon that you see on a bar like a Bitcoin sticker. And I'm like, oh, like the Bitcoins were here. And so it feels very Bitcoin. And also the cost of living is not that high. So if compared to like Austria, if you're in Czech, it's like twice the cost in Austria, what it is in Czech, and great food there. So like it's a nice country to consider, because I think, especially my American audience probably hasn't considered Czech at all, but it's just like something that like, you should be aware of.
Yeah, I think it's cool. So yeah, what can I say? Yeah.
Amazing. One last topic. We have like a few minutes left. I just want to quickly get that in, because you referenced it like 2-3 times. Do you see that power law is kind of the best guess we have at the Bitcoin price going forward? It's like obviously like Bitcoin price is non-predictable as every price of anything, but is the power law kind of like the best guess at that thing?
Yeah, I do. I think in recent years, maybe the last 1 to maybe 1.5 years, I've kind of gone more down that rabbit hole. I wouldn't say I'm like super deep down the power law rabbit hole, but I think I've sort of watched a bunch of content about it, and it just, it just seems to make sense to me that, it's just following this projection, right? So of course there are people like Giovanni Santastasi, people like Matthew Mazinskis, Seyr, and some other people out there who are kind of talking about Plan C and Sminston and a few other people, Money or Debt, a few of these guys, they're kind of talking about it. So I've been following them and seeing, yeah, actually, I think this does make sense, right? Now, of course, at first, I think people are resistant because they see it as like, oh, it's not bullish enough. I want to have like, Omega candles today in dollar terms. It's like, okay, not in dollar terms, maybe in some really shitty fiat terms, you can get 100,000 move. But anyway, the point is, I think that's the initial resistance, right? Because for many of us who come to Bitcoin, we're obviously bullish. We want something that confirms our our bias. But actually, I think the power law or power trend, whatever you want to call it, is actually a reasonable and realistic projection of where things are going. Yes, there'll be times where you're above the line, sometimes you're below the line, but it's held up pretty well, and it's got a pretty high R squared, and it has certain predictive powers, or people talk about like out of sample testing, right? So the idea is if you took the data up to a certain point and projected forward, actually the power law came out much better than some of these other models. So yeah, I do think it's interesting, and it shows this underlying behavior, right? Because think of it literally, our Bitcoin nodes form a network, literally. And so it is the growth of a network. And there are different aspects you could look at, whether that's nodes, whether that's maybe, and I believe, to be clear, I think they've checked power law in terms of address creation. They've checked power law in terms of mining hash rate growth, and of course, power law in terms of price. And so it just kind of indicates it shows certain underlying deeper qualities of how the network is growing. And I find that really fascinating. And so on one hand, yeah, I wish it would grow faster, like many of us maxis do, but this is actually the realistic projection. And I find it helps me stay more grounded, right? Instead of sort of falling for crazy hype or crazy FUD, it's sort of like, no, this is about the level that it's going to go at. And so that can be actually quite a useful thing. And I think we will start to see more and more people, especially this cycle or this kind of this era, let's say, I think more and more people are starting to look at it and actually take it seriously, whereas in earlier years, it wasn't as popular.
It's a good point. It's with the community, it's probably more popular saying the Samson Mao kind of $1 million candle is like that's what's happening. But the more realistic one with the power law, it's like, that's too bearish. Like if you tell someone, oh, we will bet $1 million in 2032, they're like, that's a long time. Like that's 7 years.
Yeah.
It sounds bearish. But it's realistic, and honestly, because you said it, like you like price going up, but I don't know if I'm alone, but like I really enjoy the price going down because I'm 27 and I'm not yet done stacking, and I still come in my prime years, and so my biggest fear to this day is that the Bitcoin price runs away when I get higher
before
incomes.
You get to take a big position. Yeah,
exactly. Like that. I mean, big position. Like I'm already all in, but like you come in your prime years, you get a high income. Like I don't need money now. I want it later. and so like, this is still my biggest fear, that we had $1 million, like 2026 at the end of the year. And I don't think it will happen. But it's like, I fear more for like a $1 million price than like for $50,000 price, which I would love 50,000. It's a great place to stack more sats, but I also stack more than $1 million. So it doesn't really matter for me.
Yeah, well, I think that's the other thing that's your edge, right, as a Bitcoiner, because you're really following this stuff, you're really into it. When the price goes down, you're trying to stack more. And so in a way, that's an edge for you. And I think it sort of gives you a guide then of like, well, 1 million is very, 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 very unlikely, basically impossible this year. But it just gives you this sense of what's realistic, what kind of rough range is the price going to be in, and then you can plan your life accordingly.
I like that, and also like the conservative one. We have one question to ask each and every one of my returning guests on the podcast, and the question is, what have you learned outside of Bitcoin since your last appearance? I think it was about like 8 months ago, something like that.
Oh, okay. I guess my head is in like parenting, right? Because I've got young children, right? So it's just sort of little lessons about, how to teach them and, things like that. Like I think some of it is just sort of not worrying as much about what other people say and just focusing on what's practical, what works for my family, right? Whether it's like, I don't know, sleep training for the kids, or things like, how to manage, dealing with kids. Like as an example, another idea I've heard is like, we have 2 kids now, we're planning to have more, right? Typical, Bitcoin maxis, we tend to have bigger families or attempt to. And one idea that I found interesting, and I've sort of learned from that, I heard it on another podcast actually, is that as you just have more kids, your skill level just has to rise. Like you just have to get better at dealing with more kids, right? So the first time you have a kid, you're dealing with like whatever, nappies and prams and bottles and, all the baby cot and just, all the 1,000 different things you have to think about once you have kids. And then each extra kid you have, it's just, you're learning to kind of do things more efficiently, more effectively. So that's probably where my head's at nowadays, right? Because I'm in that kind of child having phase, young kids of my life. So yeah, that's probably the big learning for me.
I heard recently from a father of 3 that the 3rd kid is exponentially harder because the world is made for families for 4, like 2 kids and 2 parents.
Yeah.
And the 3rd is like with the car, with the plane, with
right.
the hotel.
Or if you go to a hotel, now you got to get interconnecting rooms or 2 rooms or Airbnb. Or, yeah, I'm with you. Like I'm already foreseeing that's going to be a thing. So, but that's our task. That's our task as Bitcoiners. We've got to rise up to the challenge. So be it.
Absolutely. I love that. We have an end routine, as you know, in the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. It's a very fitting question to today's podcast. Is there a treasury company besides Strategy that you are bullish on?
Well, obviously, I got to say Orange. I'm an investor and advisor in Orange in Brazil. So yeah, obviously I'm bullish on that company. I just think it's well placed. It's the biggest in the global south. It's the biggest in Brazil. So I think there's a lot of opportunity over the medium to longer term there.
Awesome. Thank you so much, Stephan, for being on the podcast. And before I let you go, where can people find your podcast and you on Twitter and everywhere?
Of course. So search me online at Stephan Livera on X and stephanlivera.com, or just search Stephan Livera in the podcast apps or YouTube or any platform.
Awesome. Thank you so much for being on. And also thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.
This content is for educational and entertainment purposes only and does not constitute financial advice.